So this is Town Hall 60. It's Wednesday, May 26th. Can't talk without first introducing a few people. So today we've got myself and the great and one and only nicest person on the planet next to Glen Sarvady. And Paul knows of a CU that was hit. So they were able to stop the encryption and restore from backups. So that's good to hear. And Mike Lawson, if you haven't gone to CU broadcast, you're just not living. It's so worthwhile. He's really living out the credit union mantra in terms of people helping people, and he provides it all free of charge. If you haven't been there, you got to go check it out.
Well, I guess you got a good story from Jim Stickley on there today about your kids being primary online targets for fraudsters and predators. So go there today and check out that story from Jim Stickley. It's really, really good stuff.
I will, for sure. Yeah, I love when, Jim is brilliant and talks. Of course, did you tell him to stop bothering the kids? It's not him directly, right?
No.
It's that whole van and the candy thing I don't like.
Yeah, so. It's a little suspect. Yeah.
It's sus. Yeah, my kids would say sus. That's how you say it now.
That's sus. I apologize.
It's
yeah, you're
sus.
right.
Yeah, you guys say sus.
That's my girl.
Let's move on to the next slide. Talk about our sponsors. Check them out. CUNA Councils just finished the FinTech Council last week. And it was fantastic. I did 2 sessions there. I did a facilitation where we talked about, what Cranes are really trying to do with the new budget and looking at new things and kind of projecting out. And we have a representative from each council. For those of you that don't know, CUNA has a whole bunch of different councils. They've got ops and tech. They've got CFO council. They've got a CEO council. They've got a marketing council. Something for everyone. So if you haven't joined, you should. They're great. It's a great platform to meet people. It's a great platform to learn things. Correlation, your future. More and more people, man. I just talked to another credit union today that signed up with Correlation. So it's,
every month.
It's been fun to watch them grow. Fantastic group with next generation tech, and it's going to be important for the future. And as we mentioned, CU broadcast, and also big. And I tell you, things have been nuts, Mike. We have just been constantly working on digital strategies. We got a few of those coming up, and a ton of third party for, whether it be Alchemy, whether it be Q2, lots of people looking to differentiate themselves, and we're building things for them, which is pretty cool. So
now's the time.
Really been enjoying working on that with everyone.
Yeah, now's the time to do that stuff.
We've also been doing a lot of stress testing. So, that's something that people forget when they switch systems, is to really solidly stress test. It only takes one setting. It may work fine for the 100 people you're using, but then when you crank it up, boom. So the stress testing is important. If you're not stress testing, you should stress test. Give us a buzz. We'd be happy to talk to you about it. So today's special guest is the guy who started the podcast with me, one of my favorite people in the industry, one of the smartest guys I know, Glen Sarvady, part of 154 Advisors. And I did not make a joke this time, so I should get a cookie or something. He's hosted a big cast with me. He's a frequent speaker at a lot of industry events. As a matter of fact, I think he's speaking at one coming up that we both signed up for. He's an incredible thought leader and just another fan of the movement and someone who really gets it. And so we're happy to have Glen on a regular basis. I love talking to Glen, and I was excited to see that he was on today. So with that, let's get rolling and see what Glen's got for us.
Yeah, I see I don't see a couple of our regulars on the call. I'm hoping we can get a good conversation going.
Well, Tom O'Shea is here.
Tom's there, yeah. I didn't see Jonathan.
I got Paul. Jonathan, I think he had something going on, but we got enough people.
Well, my goal, and John, you and I have talked about this. I love all the guest speakers you've been bringing in, but I also really enjoy the sessions where we have more of a roundtable discussion. I mean, almost kind of an open mic session to get into some of the hot topics. We can, really share best practices and industry thoughts. So really what I did, and, you and I can talk about these things, but I'd love it to be more of an open exchange of what I've seen kind of is, kind of hot topics in the industry right now, relatively breaking news. First one on my list that I thought it'd be worth getting into is this whole notion around debit routing. I'm not sure if you've seen, there's a request for information out by the Fed right now. Durbin had always required that there be 2 different networks made available on every card to give an alternate for merchants to do the routing.
Yeah, there's a fallback in the primary.
Exactly. And it's interesting because I always read it this way, but apparently the way it's worded is it's come to their attention can't imagine who would have brought it to their attention, that in potentially many online settings, there is not that same capability for multiple routing options in a default setting. So the question is, is this a problem? There seems to be a desire to basically, reinforce the. I don't know if it's a change or if it's just a clarification of what already exists as far as what Reg II is supposed to cover. But it's interesting to me because it's a request for comment and information. I don't really know what that does other than invite a little bit of a griping match. That's already the battle lines have been drawn pretty clearly about where people stand on Durbin. So I'd love to know if people have a thought of, A, how difficult it would be to deal with that kind of routing, and B, to what extent is that a challenge today?
Yeah, let me ask a few questions about that,
Yeah.
just to tee it up. So what I'm hearing is that if I take a debit to a retail store and I hand it to them, then there's a process within their system that's going to determine how that transaction flows. If they have their way, it'd be a signature. It'll be a debit. And if we have our way, it'd be a signature. If it's, that's kind of the rub, right? And then there's the new rule, which is pinless transactions under, I think it's $50. So if it's under $50, you can do a pinless transaction, which is what you see a lot, where it goes through as debit. And in those situations, there's a fallback route. So if it's Walmart, they may switch through whoever, and were it that were down for some reason, that link, it would fall back to the other route to get to the host to do that verification and to do the real-time debit. What you're saying is in the card on file. So for example, and the reason I'm seeing the debit pick up online is because it's being used a lot for instant deposits, is what I'm seeing a lot of. So PayPal uses it for instant deposit up to 10 grand, which is pretty crazy if you think about it. And it happens in seconds. Then some of the other ones, Cash App and those guys are using it. And what you're saying is that for the online folks, it's not using the same fallback through the switch as the regular debit.
That seems to be, and again, I'm getting to the limits of my understanding, but that seems to be the way it's worded. Is the belief is, and I don't know that it's necessarily the Cash App and the types of things you're mentioning as much as just flat out e-commerce. That anything that's transacted in a card not present, I don't know if it's literally all card not present or more literally just things that are being done through websites, online shopping and whatnot, that there is not the capability to support two separate debit routing options. And I've heard different things from different people. I'm looking to see if anybody has been on the call.
Well, Kevin, I think I was going to throw it to Kevin Wright, but I don't know if he's available to speak. Sometimes he attends these and he can't speak, so we'll see if he can. But
I've had conversations I've had a conversation with a few folks that say that's in part because it's very technologically challenging in some cases. Then I've heard other people say we have to be careful about making that argument because that could be a cry wolf strategy and hurt our credibility. That maybe it isn't really that hard, and it sounds like we're just making excuses as an industry, and it really isn't that difficult. But clearly, this is another one of those cases where I think the large retailers, the big boxes in particular, are making some noise and are trying to figure out a way to limit their interchange for obvious reasons. But trying to understand where this, I think I know where it's going, but I'd like to understand better just how much pain it's going to cause, not just on the P&L, but from an operational standpoint. Anybody who's a debit issuer who has to deal with this.
Tom, you got any perspective on that?
These are all I was hoping Glenn would answer the question. Because these are very opaque areas, and I don't think anybody really fully grasps how they're going to be managed and handled going forward. It's a very difficult area to really understand some of the routing and what the plan is.
And I think that's part of the challenge is, we're into that typical kind of situation where, whether they're elected officials or regulators or whoever can draw up rules that may or may not really reflect the way things are done in reality. And are the systems really equipped to do that? Can they be? Probably, with some additional elbow grease. What's the cost benefit analysis of making that happen?
Kevin Sarver, if you don't mind, I'm going to throw it at him real fast with a little background. So every time I've ever certified, and I've actually done ISO certifications. So I've actually sat down with them and gone through the actual certification process. And every time I've done that, I've never had to do anything special for card on file. It's a one-time thing where I do it and they have a fallback. But Kevin, you did a ton with debit. Are you there and available to talk about that a little bit?
Sorry, I'm in the middle. The dogs are going crazy. I'm trying to get up with them.
No problem. So I remember, I'll let him calm down here in a minute, but I know Kevin has some perspective on that. But so what do you think the end game is, Glenn? So why would somebody suddenly want to pay attention to that? Because it's not like, as I remember, it's not like the network acquirer gets to choose. It's not like they get to go, ooh, this would be a cheaper route for me, so I'll get the backup. And if anybody knows anything that wants to pop up on the chat that has a bit of this, they're happy to help. But what do you think? Why would they bring this up?
Well, I think it's an interesting question. I think it's a little bit of a squeaky wheel, just to kind of keep pressure on the overall process around Durbin. I mean, and this kind of leads into the next topic that's on this list, which is, I'm sure many of you have seen the lawsuit filed by the North Dakota. There's two different retail associations. One's the Petroleum Retail Association, one the broader North Dakota Retail Association, against the Fed. They're actually suing the Fed, saying that they have not accurately applied the Durbin Amendment, and it should actually have much lower caps on interchange, which I think is, again, an interesting question of exactly where people are going with this. And the argument there would be that, they've quoted numbers showing that the prices really haven't gone down, which I think is fascinating, because you wind up with a couple of things. One, we've had this information from Australia forever that shows that in the real world, because the argument for Durbin is it's going to pass along savings to consumers. That clearly has not happened. Now we're even hearing that merchants are claiming that they haven't actually seen savings. And based on what I'm seeing is that it's really, the difference is not being, and tell me if you disagree with this one, the difference is not really being pocketed by the merchants. The difference is being pocketed by the acquirers, the other middlemen that actually facilitate the process of the network.
I don't disagree with that at all. That's what I was just saying. It's not as though the issuers have a choice on the backup, and it's not as though the retailers have a choice. It's the middlemen. And by the way, there are a lot of them. There isn't just one. There are a lot, because you've got the POS system that a lot of those are put in place that are doing that. But real quickly, let's just remind everybody, because we forget that you and I chat about this all the time, but let's just give a quick backup on what Durbin is for everybody.
Sure. Well, the Durbin Amendment actually is a piece of Dodd-Frank that came out of the last financial crisis, when we're looking to try to clean up some of the issues that were much more widespread around mortgage securitization and things along those lines. And Durbin was brought in relatively late in the game, and the belief is that it was very heavily focused toward providing benefits to merchants. And again, the idea was that debit or interchange rates were set too high, specifically on debit, and this gave rise to Regulation II. The Fed actually reports out on a regular basis, and most people have focused the Durbin component that actually talks about limiting for any institution of more than $10 billion in assets the amount they can charge in interchange, which, given that that's about more than 2/3 of the overall volume, is a big driver of the cost. And then by extension, even though it does not technically apply to people under 10 billion, it's affected interchange to some extent in that market as well. So now we're actually getting further into the other piece that was never quite as well documented or understood, I think, in many cases, is around the fact that there's always been the requirement that you had to have. And again, here's where you get into the reality of the marketplace versus what's in the law. The idea you have to have two different available networks. And conceptually, what that means is the merchant has the option to code and run the rails that are actually more beneficial to, at least out of those two, to them. And as you pointed out, John, that may work for the really big guys, but probably isn't a really viable option for a lot of the other folks.
Yeah, and interestingly enough, what we've seen as this has rolled along, and we've seen more and more disintermediation in the debit process, particularly from people like Square. I mean, who hasn't gone somewhere and paid for something? And I was at a little shop yesterday that does RC cars, and he doesn't have a cash register. He has his phone and Square, and he's doing pretty well. So who hasn't experienced that? I think that there's a lot of that to be seen. But what you're suggesting, and this is just, to me, I agree with this, North Dakota in particular, there's another example, and Cody's going to speak to this in a minute. He just mentioned something. I definitely want to hear from Cody on this. But there's a great example, another example of the retailers going, look, you know, this fraud that we're sort of trying to protect against is not existent. And before we get there, what I've noticed is, and this has been something I'm just blown away by, I have talked to like 4 different credit unions recently that, I mean, I've known them forever. And now they're at the 6 billion, 7, 8 billion. These guys are on a track to hit, like, I know so many credit unions are on a track to hit that 10 billion. It's fascinating to me that there's so many now. You know, Suncoast just crossed that number. You know, and there are others who are just rocketing down that road.
The power of compounding between just, you know, you grow by, you know, mid-single digits year after year. You make an acquisition or two. It's amazing how fast you can hit these throws.
It is. So, Cody, go ahead and speak up, buddy.
John, I was just about to mention, I agree with you, Glenn, 1000%, because I start noticing all these closed loop networks, they're charging based on the dollar amount that we are moving through their network rather than per transaction basis. So I started noticing with Cash App as well as PayPal, right? If you're moving $100 through their scheme, they're charging $1 as a fee. $200 is like $2. So they're charging like a 1% of the amount. And if you look at it on the open loop side of the networks, since each and every FI is individually rolling out these products, because you can't achieve that network effect of what PayPals and Squares or Cash Apps can get benefit, are getting benefited currently through that network effects.
I completely agree. That's what I was saying. And I honestly think that it's more about deposits than it is debits in some way, Cody. Because that's the feature functionality I see everybody kind of going after, is that instant deposit. And the only way to do that right now is debit.
Yeah.
And what's fascinating about that is that leads to another issue that has been long a credit union issue. Tom, I remember you and I discussing this when you made the move to MSI as one of your major projects, or MSS, was the fact that most credit unions paint a broad brush across all the depository channels in terms of the limits. So even though Glen's been a member for 1,000 years and, you know, regularly has, you know, put a lot of money in, he's still got a $3,000 limit, just like me, who joined yesterday, for how much money he can get available and not on hold from a position. But in some ways, this makes you rethink that because now it's coming from different areas. Go ahead, Tom.
Yeah, I was just going to say that's really been a technology issue to try to be able to, you know, build that intelligence and say, all right, Glen's a really good member long term, and then, you know, John has really nothing coming in. He $5 comes in on the first and $5 is out. He's got nothing at the end of the month. John's a poor risk, so we need to discriminate between the two. Oh, that's not a good word. We need to identify the behaviors,
right?
Yeah, and then manage those accounts and give people that have that relationship and that wherewithal the higher limits and all. You know.
So Glen, if I had to guess the game based on what Tom just said, it's the retailers going, we want to pick our own routes. I think that's step one. Step two, and they've tried to do this 100 times, is, I mean, you know, you got to be a programmer to figure out your way to a signature in any of these POS systems. Like, you know, hey, I don't want to put my PIN in. Oh, you got to hit cancel 3 times, spin around, do the hokey pokey, and then maybe you might be able to do it that way, because it's not their first form. You know, they've already programmed these POS systems to do that. They're already designed to take the most cost-effective route, but this would be one more piece. So if I were looking who's behind this, it would be, for me, I would actually look at the middlemen POSs. What's the one we talked about? Not Vertify, but there's a big one that's the FIS bought up. There's a couple of them. They're the major backbones of the POSs. Like you see the main front ends are these new things. They're always like a smooth white box, so you can't figure out where to put the card in. Here, put your card in. That makes you feel old, doesn't it? When you can't figure out where the card goes in the device. Like that really frustrates me. But that's what I think is the big change. So
I don't know. It'll be interesting to see. And I really wonder, we often just kind of talk about the merchants or the retailers as one monolithic group. It seems to me that there's at least two extremely different sets of motivations. So you got the big guys who obviously drive a very disproportionate share of the overall volume, both in number and in dollar amount. And they have the wherewithal to program and customize these things to work the way they want it to and wring every little bit out of the system. Then you've got the long tail of smaller merchants that are never going to be able to take advantage of this, as far as I can tell. And that's where I think, again, the middlemen make a lot of their money, is because for the same kind of things we were talking about, simplicity winds up being, a big part of the value proposition. Kind of to Cody, the flip side of what you were saying, in a lot of these cases, no one bothers to worry about, is it debit? I'm just amazed at how often I go into a shop and I say, I'm sure you'd rather me give you debit, right? Debit, credit, it's all the same. I get charged the same. You wind up with a situation where, for simplicity, so they don't have to think about it because they don't want to think about it, they're paying a single rate across all transactions. Well, as the shift continues to move, the mix continues to shift in favor of debit, that's an implicit price increase, because they should be getting a lower price as the mix goes toward debit, but they're not. They're paying the same amount. And I think that, I don't know to what extent something like this North Dakota situation with the retailers, is it an intentional attempt to kick up dust and kind of confuse people? Is it a misunderstanding of the situation? Is it a belief that the Fed ought to be regulating these middlemen as well? Because I'm not really sure how you're going to wring it. You can try to wring more money out of the FIs, but it's not going to flow through to the people that think they're going to be getting it anyway. That's where I kind of come out on this.
yeah.
Well, John, I think there's two main issues. One is the rails and the other is the liability. So regardless of how the transaction flows, you're either on Visa or MasterCard. Mm-hmm. And we're all paying too much. And just like the gold rush, it's the middlemen, the suppliers that are making all the money.
The guys that sell the pickaxes and
Nordstrom's and Levi Strauss,
Yeah.
So until we can get away from that duopoly of Visa, MasterCard and have alternatives like faster payments through the Fed or an ACH initiative or whatever it might be, we're still going to be stuck paying far too much than we should. The second part is the liability, and this is the big issue that we as FIs push when we're on the Hill, is that look, we take the hit for lost stolen cards and reissues, reputational hit. Yet it's happening on the merchant side predominantly, where the merchant or their vendors are the ones that are creating the leaks, and they have no skin in the game as far as liability. And when you get a new card issued, you think, oh, your bank or credit union did something stupid, and we're just responding to what happened to us. Yet we can't tell you all about what's going on. And until they have skin in the game, until they have responsibility, it's always going to be lopsided. And that's one of the big issues we push, is that they need to have data standards, and when there's a breach that's known to come from them, they need to pay into that. They need to offset some of our costs instead of us going through a lawsuit to recapture some of that money.
Yeah, the number of reissues, the data I've seen in terms of the histogram of some accounts, the number of reissues that have to be done on almost an annual basis and much more, is just phenomenal. And I don't know how you can quantify that and pass it along, but I agree the incentives are clearly misaligned, and I go as far as said just flat out perverted.
Well, let me a couple things. Tom, first of all, I see you're working with Mike's new liquor store. That's good. The Lawson's Finest Liquors.
This is brewery in Vermont.
Tom, just for fun, current numbers on percentage of your income that is, and I know it's been dwindling. Last time we talked, you told me it was around 25. I think it's less than that now for interchange, right?
Yeah, I think it's around 20% now. It's dropped.
Yeah, so that's a considerable drop.
Yeah.
Paul, I know it's your organization. You keep a good eye on this. What are you seeing in terms of interchange, in terms of whether or not it's still a viable income source? I don't know if he can talk to us. It may not be Paul Apodaca. I can never say it right. We'll see if he. I think he might not be in the spot where he can do that. But Kevin, before we move on from this topic, sounds like you could chat a little bit. So Kevin, what do you know about online fallbacks?
Yeah, I mean, the merchants continue to find that, based on any rule changes, based on any loophole, they continue to find ways to route to, whether it be identified as a fallback or not, they will route at the cheapest amount. And particularly when you look at the larger, more sophisticated, Walmart's probably the biggest one who has tried so many different ways, to get around the system. And I heard the CFO from Walmart speak at a card payment conference probably 5 or 6 years ago, and he referred to basically used the example of Canada, and Canada's average interchange rate is a penny, and he said that's our goal, and we're going to get there. So I think that the other thing that I think was in where I got the same information as Glen did with North Dakota, South Dakota, whatever one Dakota is also that they're trying to tie overdraft fee income to this as well, to Durbin, and force you to basically you would have 60 days to cure before the financial institution could place a fee on the member account for that overdraft using a debit card.
Huh. That's interesting. That speaks to, so let me make sure I want to understand this. So I go to buy something from Walmart. I don't have the money. Now what happens today is if I have overdraft on, or courtesy pay, it's sometimes known as that, then when it comes in, it will, if there's overdraft, it'll pull from my savings if there's enough of Reg D left to do that. If there isn't, it can also do a courtesy pay, which is sort of like a loan and a $25 charge or whatever. And so what you're saying is that wouldn't happen. I'd still get the goods, but then I would have to settle up with the merchant, me as a person, or I'm confused.
Basically, what they're saying is, from a legislative perspective, the financial institution would have to change their policy that if you didn't have the funds available, that the financial institution could not hit the member account with an overdraft fee until it was 45 days or 60 days that the member had the opportunity to cure that negative balance that was caused by the forced post transaction coming through and posting to the member account.
So why would they do that? Like, I mean, it's in their best interest that the customer leave with the goods, right?
Yep.
They would leave with the goods, wouldn't
And
they? What I'm hearing is it's going to basically turn a debit card into a charge card.
It turns it into cars. I'm thinking it's a buy now, pay later. It's almost what it sounds like.
Yes, I think it's closer to that. You're right. And I think like I said, and I don't, how have the conversation with, how do you tie the negative balance after 45 days to that original transaction? You've got all this other transaction activity going through. So what was the transaction that actually caused the negative balance?
Yeah, and which merchant did it come from, and how do you cure it? And what if they can't cure it?
Yeah.
Then what do you get them to give it back? Hey, take Mike Lawson, you take that milk back to the grocery store.
Well, and the perfect example of that, a couple of years ago, one of our fraud analysts at the credit union was working on a case that she came through and saw fraud happen basically in real time. You could see that this was a member's card that they were trying to use, and she called the store and said, I don't process this transaction. It's fraud, and we know it's fraud. 100% we know it's fraud. And the merchant basically said, I'm going to sell the TV because I'm going to make my income on the sale of that TV. I'm not going to lose it. and I don't have basically he said, I don't have the liability in this case. So I'm going to process that transaction.
I'm still trying to get my head around what you're saying, because I had not read this aspect of it, Kevin.
Yeah, Kevin, can you post that article?
Why would the merchant care? I'm not sure. I mean, at that point, the merchant's already made.
Oh, the merchant doesn't care. It's all between. It's the back end of that merchant transaction. So if I authorized the auth coming through, so at the time that the debit transaction was made, I had enough money in my account. In the delay between the auth and the posted item coming through, I had a check clear, and so now I don't have the money. So I got a forced post transaction. I got to take the member negative. In today's world, you would have a fee hit the member account for courtesy pay or overdraft, whatever you wanted to call it. And so that the financial institution basically would, in that case, normally hit the member's account for that fee. But what they're saying as part of this article was that you would be required to give the member 60 days to cure that negative balance that caused by the force post item that came through.
So who is proposing that be the way we do it?
It's part of Durbin 2, what they're calling Durbin 2.
Okay, so it's whoever's crafting Durbin 2. That could be an Elizabeth Warren thing. It could be somebody.
Yeah.
And again, it's another one of those where if I totally try to erase from my mind any knowledge of how the back office of the bank actually works, I might be able to convince myself that at least the idea has merit. It just is totally detached from reality.
Yeah.
Yeah, exactly. If you were living in a bubble that only included those two entities.
Yeah, okay. That's okay. I was confused. I thought you were saying that was part of the North Dakota suit. That's why I was confused. But okay, gotcha.
No.
That makes, that would definitely be, and I've got to assume, well, hopefully that the lobbyists for tuna, et cetera, have enough clout on the Hill that they make something like that go away, because that just seems almost entirely impossible to implement.
So I was Will McFlynn, probably McGlynn, and I probably said that wrong, but he posted something very interesting. He's talking about the Canadian network, which I spent a lot of time on, Interac, and he's right. They are separated from the Visa network, and most of the transactions do go through Interac, which is part of the I think it's Desjardins Bank that is behind all that. And I've worked with some credit unions out there that built McGlynn, I got it right, yay. That built a debit deposit structure through the internet based on that, because it's an open system. So, but I do think that they never imagined the e-commerce to rise like it has, particularly around because Canada's being hit pretty hard. I mean, the Ontario province, the Waterloo province, all that out there is still locked down. And they ain't far from you, Tom. They're not doing well with the variants. And they're still locking down everything over there.
It's not just them. I've got a good friend I've been communicating with in Vancouver, and they're in no better shape.
Yeah. So, well, I'm gonna spin this in a different direction there. You know what water does when it can't find a way through, Glenn?
Not sure where you're going.
It just finds the next easiest route. You know how I know? Because my basement floods about
your
every.
basement. You've had some basement.
Not every day. Yeah, I'm planning on turning it into an Olympic swimming pool. So if we use the water theory as sort of the basis for transaction, then people are just going to turn to the next easiest place to transfer and the next cheapest. And you know what I think that next cheapest and easiest place to transfer is? And I can tell you I used it yesterday to transfer money to a friend in Canada. Come on, you could say
Amazon gift cards, because that's what I did.
Yeah, no. Try again. You'll get caught at customs. Oh, Nathan said it.
Crypto.
That's right. It's crypto. And that's becoming more and more mainstream. And, Cody brought it up too. It's where those debit transactions are coming from. And I'll tell you, the other day I was trying to transfer a bunch of money to a friend who is in Canada. who does robotics work for us, and I couldn't find a way to do it, but I did it in 2 seconds using crypto. And so, it's one of those things where, and actually, Glenn, I want to do a note on this. I just got the new numbers for the outbound crypto and inbound crypto for a bunch of my credits in the IC, and I'm going to work with you to put together a list on them. But it is from 20. We ran this report last year in February about 2020. It is 10x more the inbound and outbound on the crypto. And actually, I'm about to produce a document so everybody can run this report. And if they want to send it to us, I was thinking about putting together a big document for it. So I was going to put something on the website. But
your use of crypto along those lines. I mean, I know you and I often come out on different sides of the crypto conversation. That's exactly the kind of use I think makes sense.
It does. It does for Bitcoin, right? Because it's a security. The way they do it, but it's not necessarily the same for some of the Ethereum coins because they actually do something. But anyways, it's a fascinating discussion, and I think one to have because it's a big part of our income. And my fear is, and Tom, maybe you can speak to this a little bit, but my fear is that we are one more catastrophic event away from losing another 500 credit unions pretty quickly that just get merged or whatever. And something along these lines that eats that much into income could be it, right?
It's right at this point, it's death by 1,000 cuts. We have no margin, and then we have all these other sources of income that are just being chipped away at. You have fintechs on the perimeter also that are eating little pieces of our lunch every day. And it's not a good place to be right now.
But there is no more solid income source than interchange, right? That's the one thing that all you got to do is get up and put your Lawson's Finest Liquor shirt on every day, and the money just comes, right? It's not like you're spending a whole department who's dedicated to interchange, although maybe that should be the case, right? But you don't have a department.
Once you issue the debit card, it's a royalty almost, right?
Right. And so Glenn, and that's my point, Glenn, is this is one that I'm really glad you're bringing up because it could be an extinction event for some credit unions if it snuck up on them and it dropped from that 20 to that 10 and there wasn't a way to recover. It's like flying at 50,000 feet, you can recover, but when you're down at 10,000 feet, it's a short trip to the ground.
I totally agree. And I think that's where, being aware of it. And as I said before, I'd like to think that we've got, enough clout through CUNA, et cetera, on the Hill and then through the leagues to make that case. But yeah, that's the part to your analogy about water again. If you keep taking away the various revenue streams, well, if you're either one of three things, either you go out of business or you figure out a way to replace those revenue streams. And you can do that either through some really innovative, great new value-added way, or you can start getting tempted by some really lousy ways. There's only one of those three solutions I really like.
The free checking account is a dinosaur.
Exactly. That's the one that I always come back to. Why? I realize the genie's out of the bottle, but if we could come back to some way of creating the same way you talk about, you just wake up in the morning and the interchange shows up. If you knew that you were going to get X dollars a month per account because some other bundled package of services was being provided, and it was an annuity or a perpetuity, whatever you want to call it, to me, that's the one we need to figure out a way to get back to. Easier said than done.
I think you'll get rid of the free checking account will go away, but we won't have like a monthly service charge. We will have a subscription. You'll have a banking package.
Ooh, Tom, will I get a box every month?
Sure, John.
I will tell you, if you figure out how to send them a box of some, pardon my language, shit every month, you'll have everybody in the that's the secret. That guy that took over GameStop, he built the company Chewy and rocked Amazon's world with that. If you send someone a box of stuff every month, that's the new credit motto. I don't know what the box is. Maybe it's liquor. Maybe it's I don't know. Yeah, your liquor store, Mike, the Lawson's liquor store. No, I'm serious though. I agree with the subscription con. You got me all excited because I absolutely 100%. I think we had this discussion one day driving cross country, but I didn't know about the box thing at the time. The box is key. You got to send it, because that's, what else that box does? It reminds you that you've got this company that's sending you things that you need. There's got to be stuff you need financially.
It's like opening a gift. Everybody likes to get a box in the mail. Yeah.
Right. Or give them a new debit card every month. That'll solve the crap. Wait, you know what? Can't beat them, join them. Here's a new, it's like your car tags. You just here's a new one. This one is green. The other one can't be used. Nobody will ever steal it then. You'll be set.
With data breaches, they almost get a new card in the mail every month.
I was going to say, it's almost no additional cost. Yeah.
Right. Might as well just start sending it to them, along with maybe a plush toy. And if they have dogs, send them some dog stuff. I'm telling you, one check at a time to build your checkbook over a year.
When you think about it from a subscription, you could include in there a certain level of overdrafts at no charge. So you avoid that issue. A line of credit at a reduced rate. You fully customize like credit limits and things like we were talking about earlier. When I do a mobile deposit, again, it's all risk-based. So if we do the risk models, Glenn gets instant access to his mobile deposit, where John has a 30-day hold. So you design the product, the subscription around those types of features.
Sorry, you're saying smart things, but Kevin's stealing the show with his puppy. But you're exactly right. You know what will actually drive that? You know when I think that'll happen, Tom? I think you're going to be able to charge for AI. I think if we truly get autonomous banking, which is a concept I'm continually working on, and I think RPA may have a play in that, then you could charge for it. Like a subscription to autonomous banking that not only did everything you just said, but like you get this level of AI that will pay all your bills, or it will do this kind of savings, or hey, you want to go up to the next level? Okay, then this will also manage your Schwab account, and it'll manage your whatever.
It'll find lower cost sources of credit and automatically move me.
Yes.
It'll fly.
Yes.
And then say
yes.
Sign off on that.
It's autonomous banking. It's Tesla, but for banks. That's coming. Because I'm trying to think what you would pay for. That's it right there. I pay for that all day, every day.
I want to go back to that AI point, but I see Will just putting I love this, the idea of a blank check. If you want to send something out, that they
to a community cause. I love that.
And I was thinking along the same lines. I mean, again, if you want to it's obviously a logistic challenge mailing things out. But the other one, if you really do think that there's some gratification benefit of sending out some physical stuff, small businesses, presumably customers of the credit union. Who are
that's a marriage made in heaven.
There's
some products from all of our commercials.
So every month we feature a different, say, seg group, or a small business, and we send maybe a product. It's a cross promotion. I mean, it's just plain and simple. Where if we work with a cookie company, I was just talking to somebody about that.
Or
so we send a sample of their cookies to members.
Everybody gets flowers.
The
tulip thing that you did.
Mm-hmm.
That would be cool. And also, Main Street, which is primarily where our, by the way, I think we could call this QE. That would be my name for it. We go with QE, kind of like Chewy, but I was just working on a logo. Don't worry, I'm ahead of the game here. But most of our commercial clients are Main Street, and that's who needs the help. And that's where, by the way, if you're looking at those boxes, it's it would basically be almost like an Etsy play in some ways.
Yeah, exactly.
And that would be hot. That would be super hot. Can we do that at Aspire? Can I work with you to do that? Would you be willing to set it up?
Well, we could do that.
I'll help you mail out everything.
We could do that, but we're out of business in 2 days.
Dang it. But you're still going to come to the meetings, right?
Yeah, absolutely. Yeah.
I knew you would. I'm hoping we can hire you. You got to come join us. But it seems like you have work already. So.
And then, then when you use let's say you're featuring that merchant, and then when you tell your members, if you go to this merchant, this cookie merchant, either online or brick and mortar, you'll get X% discount this month. It's cookie month. Yeah. And we feature them, and so it brings it all the way around. That is a win.
If that was a QSO, I would have everybody join that, because it's marrying three things. It's marrying the local, which is, I think, a big one for us, the buy local, the community, which is another one, and your commercial services, which we've never found a good way to connect. It's funny, I was talking to a credit union the other day, Oh, it was at Air Force Academy. I was at Air Force Academy Credit Union. I have not left this house in forever, and that's the first step I've made inside a credit union and since 2019, because I didn't even go to a credit union in 2020. So I stepped foot in there, and there was a guy out front, and he drove in. Oh, Tom, you would have loved this. He drove in, and Kevin would love this too, in a 1962 Ford truck, perfect, 100%, gorgeous. And it was an old guy from Falcon, probably from his farm. I said, man, that's awesome. He says, you want to buy it? I said, how much? He said, 20 grand. I said, I don't know, let's go inside and see. Right. And so on the way in, I asked him, hey, are you going to put that up on the bulletin board? He goes, what bulletin board? And I thought about it, and I asked the lady that I worked with there, super nice lady named Deborah. I said, hey, you guys still got the bulletin board around here? And I remembered I bought 2 cars coming up when I was at Suncoast off the bulletin board. Why? Because it was from other teachers. It was from other people that I trusted, and I knew Suncoast would facilitate between us for the purchase, which they did. So that's another example of that community play that's just missing. It's just not there anymore, where the SEGs were tied together because they went to this physical locale, and that bulletin board, it helped me. I can remember thinking, okay, I'm going to use this guy because he's on the bulletin board at the credit union. Therefore, he's a member. Therefore, he's probably better than other ones. Or there's some link there that makes me feel like I have a better connection. Somehow we have to digitize that. It's got to come back. I've said it before. I'll say it again. Digital, that's got to, because that guy, I mean, if he puts that truck up on the board and all the military guys come by, especially the young cadets from the Air Force Academy, they're going to see that and want it. That's the kind of stuff they like, old Triumphs and things like that. So pretty brilliant.
This is exactly the kind of conversation that I really, really value out of these sessions. And I don't think that this would not have come up from any one person in isolation. It came up from a nice conversation of 3, 4, 5 people.
So I just registered QE.com. Tom, I guess you need something to do. You can be the president of that queue. So now we're not going to have a lot of resources. So how are you at packing and shipping? You'll be fine. We'll just get you a whole bunch of tape and boxes. You got room at the house. And you can start. You need to send out about 15,000 a month, but don't worry about that.
Sure.
I bet there's some company that does that.
I know we're coming up a little bit on time. I got one more, and you mentioned AI briefly, John. I wanted to follow up on that because that's the other piece. They've extended the comment period for another month, but there's also a request for information from the regulatory bodies, and NCUA obviously being part of it. So it's a chance.
Yeah, they reached out to me directly on that.
Did they? The NCUA did. Wonderful.
Actually, I had a conversation with them on something else, and they said, "Hey, by the way."
Well, the idea being, if people are not familiar, they're looking to understand how credit unions are using AI, and both from an opportunity and a risk standpoint. Basically, it sounds like they're almost asking, what should we be doing in terms of how we think about regulating this stuff? What would be valuable?
I don't know if you noticed, but they posted a new role on the NCUA. It's a new job.
Yes, I saw that. It's a very well paid role too.
Yeah, it's basically NCUA to deal with fintechs. The purpose of the position is 100% sort of interact in the fintech space, and as it relates to regulatory with the credit unions, it looks like based on the
as a conduit to the board. I mean, they do require it to be in the Arlington, Virginia area, so you're moving into a high cost market, but it's a well paid position. Yeah.
So I think we're going to see more along those lines, but I think it's a mistake to ask what credit unions are doing with AI right now, because
I totally agree. I
think you should be asked what they should do, and I think they should be telling from a risk standpoint.
But I do think that if people can comment on, what would we like to be doing, or what are we concerned about? Because, one of my thoughts is you almost go with the negative on here of, okay, well, if you regulate us too much on this and you don't regulate the non-banks or non-FIs, you're going to once again push people into getting these services that exist from other channels that won't be regulated. Is that what you want? Doesn't make a lot of sense.
Hey, Will just posted a really cool
I've already opened up a document because I've yet to learn how to save these chat windows once we.
We save them all. We'll send them to you.
I'm just copy and pasting into a Word document.
We have to send them to the NSA because Tom's on. So as soon as the meeting's over, you have to send, anytime Tom joins it, you have to send it directly. You'd think they'd be able to get it
Automatic.
themselves.
It's automatic.
Yeah, I was going to say, you'd think they'd be able to get it. Well, with that in mind, Tom, I want to acknowledge your contribution to the industry, and I'm not being funny here. I'm being honest. I can't tell you how many shows I've been at, how many times I've spoke, and you come and you find your way to the front row, and how much more comfortable I feel. And you've always been a huge supporter, not only of Big, but just, you're always thinking about ideas for the credit union space, and I know you'll continue. You always have a home here at Big. We thank you because you've really been a big important part of shaping my thoughts about the industry and what we've done. So with that coming to a close, I just want to wish you the best, and I hope you'll keep coming around.
Well, thank you, John. I really appreciate that. And this forum in particular has been exceptional. And I really enjoyed talking to you guys and sharing what I've got, what little it could be. And I'm looking forward to figuring out what I want to be when I grow up now. So,
yeah. Well, I hope we can be part of that. And I think Aspire's got a great future because of you. You set everything up really well, despite even the challenges like the medallions and things that you ran into.
Thank you.
That was no easy trick, I know. And I remember, our group, Kirk in particular, working with you through some of that. That was very difficult times. And you've always kept your head up and just been an inspiration to the rest of us. So thank you. And I know you're going to stick around, so it's not goodbye, but I just wanted to acknowledge the service and what you've done for the industry as a whole.
Thank you, John. Appreciate it. Bringing a tear to my eye.
Aw,
Thank you.
Except for you can't see it because my camera's not as good as yours right now.
Love you, John.
You too, man. And I hope you keep coming. We're going to continue to, I think you've got a lot left to give. And certainly we've been trying to get rid of Glen Sarvady for a while. So hopefully.
We'll move over to stars.
You can't even not pay him and he still shows up. It's crazy.
Right, yeah.
No, I think there's a lot of opportunity there. So just want to head out with that thought is, we'll keep seeing you, I hope, and you're always invited.
Absolutely. Thank you very much. Really appreciate that.
All right. So with that in mind, I hope everybody signs up for the webinar tomorrow. If you haven't, it's going to be really good. I can't say enough for Roger Grimes. He is a fantastic speaker. A lot of great books. If you haven't read them, ransomware's it's coming. It's coming, and it's crazy stuff. Wait till you hear what we got to say. Just that idea about having your cyber insurance on your network and them finding it, that's just the tip of the iceberg. And next month, by the way, we're not having a meeting next week because it is a holiday. For those of you who are service members, thank you for your service. We certainly we appreciate that. And because it's a shorter week, we're going to skip this month or next week. We'll be back after that. And by then, one word, UFOs. That's right, they're real. And how's that going to affect the credit union industry when you have to have UFO insurance? I don't know. But they're about to release the full report, and I got to know. So we're going to find out about that. And I still got some really wild guests coming up for the summer. They're going to be a little bit mind-blowing for everybody. Names that you'll be like, what the heck and why? But when you see, I think it'll be pretty cool. So I'm very excited to announce some of that. We've been working on it for a long time. And by then we'll be moved into hopefully the new building. So we'll have some tremendous opportunity out there. So thanks everyone. Remember, it's www.big-fintech.com/webinar. I hope to see you there. It'll be fantastic. Even if you can't make it, look for the recording. And thanks as always to Cody. Thanks to everybody who contributes. Will, thank you for being our main texter and really putting a lot of great information in. This forum has been fantastic. So, and Glenn, I assume you're going to turn this into a podcast or something.
There's always tidbits. I mean, I love how we can always just grab the best and those great thought starters. So yeah, definitely threads to pick up on.
Mike, you got to go.
Yep.
Any last words? Anything else to check out from you?
No, it's fascinating. I love especially like the second half of the conversation as well. It was like when we were all kind of brainstorming on what's next and what we can do, the autonomous banking and all that type of stuff. That was really a lot of fun.
Yep. I already started the QSO. Tom's the president. You are one of our main shippers. It's either that or delivery. So you have to take a chance. We're going to get you a little van that says QE.
Chief Shipping Officer.
Yes, that's you. All right, guys. Thanks, everyone. Have a great day.
Thank you.
All right, thanks.